All right, everybody, welcome back to another market close. It is Friday, April 19th, 3:45 a.m. Not a.m., p.m. Today, we got a bloody day. And honestly, dude, like truthfully, I don't feel upset about it. I'm not scared. I'm not this, I'm not that. I think we needed a day like this. We needed a string of days like this. This is going to be the sixth day in a row after 7 months that the S&P ends red. And I wonder, what do you guys think? Is this kind of sobering? Because it does feel like for the past 4 months, we've been floating on cloud nine and things were getting a bit crazy. Companies like SoundHound going to like $10, right? Like it was getting a little frothy. I think we can all admit that. And the idea that we get at this point, the S&P has corrected, I believe, 4%, if I'm not wrong on the numbers. I'll tell you right now, year to date, the S&P is up. No, 6%. We've had a 6% correction. 4% more. That's basically a 6% pullback, another 4%. So we get a 10% a full correction. I think it's actually not that crazy. It's not that crazy at all. I really don't. So the whole market's down today. We'll talk about some individual equities and what's going on. But in general, the reason I believe the market is down, I don't think it's Iran-Israel anymore. I think it's just a string of catalysts that have happened, including Iran-Israel, more so to do with inflation and the lack of a rate cut coming anytime soon, which is getting the market to just be like, let's just chill out a little bit. And honestly, before earnings, I think it's better that stocks are lower than higher because then they have some room to run. We saw that with Netflix yesterday, right? Didn't really have that much room to run given it was already up at 30% year to date. So I think it's reasonable. I actually think it's really reasonable to see some of the stuff that's going on. Felicia says red is fine. Needed to start deploying funds. Yep. It makes sense to start putting some capital into the market, even if you start slowly DCAing that. Now that we've gotten an official pullback, 5% down is a pullback, 10% is a correction. We're down 6% on the S&P. Obviously, individual equities are down almost 20-30% year to date based on these. Based on the equity. June says it feels like we stepped back in time a year and a half. You know, it's crazy. It feels like that happened, but the S&P still over the past 3 months is up 4%. Over a year to date is up 4.5%. And over the past year is up 20%. So it was much worse back around this time, July. No, we're in March. We're in May. We're in April 2023. The S&P was 404. Right now we're at 493. So we have improved a lot. It's just we improved really quickly over the past 3 months. And this is getting a little bit of a breather. Now, before we get into it, we have to talk about a bunch of stocks that are down today and some of the reasons that they're down and what's happening. I did buy a company, and this is a company that I've been waiting to get a position in for a very long time. Today, I made the decision to officially become a shareholder in this company. And I think that, I just think that I'm going to use other people's fear as my alpha. And as a result of that, I decided to initiate a position in this company, and a pretty substantial position, in my opinion. Ladies and gentlemen, I'm a shareholder of Nvidia. I'm officially a shareholder of Nvidia. And that is, I'm proud to be a shareholder of Nvidia. It's been a long time coming. The GPU market is insane. It's a monopoly. Obviously, Jensen Huang is going to get the job done. And so I now own 0.001285 shares of Nvidia. You guys can laugh, but I am a shareholder of Nvidia. I mean, you can laugh all you want. I own Nvidia stock. I wasn't willing to buy it at $950. That was just too stupid to buy it at $950. But at a 10% drawdown, I think it's more than reasonable that I initiate my position. Now, why did I buy Nvidia? Well, that's easy. GPUs. Why is Nvidia down 10%? That's not as easy to come to an explanation for why this sucks. Look at this thing, dude, down 10.15%, dude. This is insane. So the reasons I've come to for why Nvidia is down is I think, and I put this on Twitter, it's a really basic form of analysis, but I do think the market's feeling like, hey, we don't want to go into Nvidia's earnings with this thing pumping at $950 because where's the room to run? I think it makes a lot of sense for everyone to feel that Nvidia below 800 before earnings or below 700 before earnings is a way better way to start the earnings seasons for Nvidia than being at 950. Now, that's one reason I think it's down. It's just the market taking some profits. The second reason, and if you sticked around long enough on the market open, we talked about this today, SMCI delivers numbers on the preliminary numbers before the earnings. So they have their earnings, which they're going to do next week, and then they deliver numbers before those earnings, and they've done this for like the past 2 years. They didn't do that today. And this whole transparency thing that's going on with Netflix not giving their numbers and now SMCI saying, hey, we used to give you numbers, we're not giving you numbers. SMCI is down 23%, guys. 23%. They have lost $20 billion in market capitalization today. The stock is sold, I believe, 6% or 7% short. Let me just check right now to confirm. There is a decent short float on there. Is it 10% on SMCI? Is it 10%? It might be. It is 6%. 6%. Okay, so 6% short. And there's only 55 million shares. So, low float, little relatively high short float percentage compared to the number of shares. Yeah, you're going to get something that can be volatile. Them choosing to not disclose preliminary earnings, again, it's this idea that it's not a red flag, but the perception is that it could become a red flag. And as a result of that, I think investors got really scared of this thing today. Tesla, we'll talk about it in a second. That's at 146. I think investors got very scared. If SMCI has bad numbers, let's just imagine SMCI has bad numbers. Nvidia is potentially going to have bad numbers, right? And if Nvidia has bad numbers, does Micron have bad numbers? If Micron has bad numbers, does AMD have bad numbers? Like, it kind of brings into question, well, wait a second. Not is AI not real, but is this a bit more cyclical than we thought when it comes to the semi plays? I don't think SMCI is going to have a significant impact on Nvidia. I might be wrong on that, but I do think them not giving those numbers, investors are like, well, wait a second. Why? Right? It's like why not? And if you've done it in the past and you're not doing it this time without a good enough reason, and SMCI can't say, oh, we're too big of a company, we don't have to, no, you're not. You're a $60 billion company is not nowhere close to not doing that. Then that was interpreted as a red flag, I believe, to the market, and so the market got scared. As a result of that, Nvidia sold off. Now, the other reason Nvidia is selling off is it's Friday. Over the weekend, we don't know what's going to happen geopolitically. Iran seemed to take the hit on the chin last night. In fact, they denied that they even got hit to their people, trying to tell them hey, Israel didn't do anything to us. So it seems like that, at least for now, has subdued. And as a result of that, maybe geopolitically things will be okay, but the market probably doesn't want to hold stocks over the weekend in case something bad would happen. Why would Nvidia have bad numbers? Because of SMCI. So SMCI provides the server space for the GPUs, and there's certain technology that they provide to create those servers for NVIDIA's GPUs. You have to hoard those GPUs in particular servers in order for them to be secure. If SMCI is not disclosing their numbers, the bear case is, well, maybe they don't have that much server demand because NVIDIA doesn't need that many servers because NVIDIA doesn't have that much GPU demand. I don't think that's the case. But if that were to be the case, that would not be good for both of those companies, and they would definitely see a little bit of a correction. If the market, S&P 500, 494 right now, gets to 480, logically speaking, NVIDIA has another 10% down to go, right? Unless the dip gets eaten up while the market's tanking, but NVIDIA at this point, semiconductor stocks are 19% of the S&P 500. NVIDIA, I don't even know what percentage that is of that 19%, but I'm assuming it's a pretty hefty percentage. So if NVIDIA falls, the market's going to fall. If the market falls, potentially people that are selling off the market are also selling off shares of NVIDIA. And we could see a little bit dicey of a time for NVIDIA. Let's talk about Tesla. So we'll talk more about NVIDIA after the market closes. Here's Dan Ives. I think he had some interesting thoughts on Tesla on CNBC this morning, and we'll talk more about them. Tesla down 2% at 146 here today.
This is here at Post 9. We know that Tuesday is going to be a big day. You say the clock has struck midnight, and the line that stuck out to me, trading in the Model 2 for Robo would be a tragic gamble, in your opinion.
I think it would be a gamble that could maybe even define the future of Tesla next 3 to 5 years. And I think right now the big nervousness is Model 2. That's a key part of the growth. That's 50 to 60% of the incremental growth next 2 to 3 years. Robo-taxis, autonomous, that's not for another 5 to 6 years. And I'd say, look, we've seen over the last decade, we've been through a lot of white knuckle moments from Musk and Tesla. This is up there. And this has really been a Cinderella story that in the near term has really turned into a nightmare on Elm Street. It all starts next Tuesday. Needs to control the narrative, because if there's no adult in the room, there could be darker days ahead.
So if he really does say, we're going to play this long game, and it's going to come at the expense of the two, you would re-rate?
That would be, if that happened, it would be a disaster of epic proportions. Because in the near term, and you've seen others throw in the white towel because of the fears of that and because of some of the stuff that's reported, that would really put a massive black hole or gap in the growth for the next few years. And if you look at the last sort of 2015, 2018, there were levers that Musk could pull and ultimately did pull. And that's why it's, you've seen the history. But this I'd say for the first time in 5-6 years, long-term Tesla bulls are really calling, feels like they're about to hit the elevator if they don't hear what they want on Tuesday.
Why are analysts like you and investors so downbeat on the prospect of the robo-taxi future?
Bullish on robo-taxis, bullish on autonomy. The problem is this would be like Cook on, on May 2nd, coming out and being like, okay, iPhone 15. Now look, we're not going to have anything till iPhone 21, but trust us. Thanks for being on the conference call. So that's the problem, is that we're bullish.
It's always worked for him before.
Exactly. And I think now the difference is you need a refresh. Competition come from all angles. Game of Thrones that we're seeing in China. And the credibility for Musk has definitely been questioned, because the last 2 conference calls we've talked about on the show, those have been train wreck horror shows. So it all comes down to clock struck midnight. Tuesday night, adult in the room needs to step up, navigate the story. And that's why we call it a fork in the road moment. We are still bullish on the long-term Tesla story, but this is a Category 5 storm, and the pilot on the plane can't be Ted Stryker.
But what do you there?
Who's Ted Stryker? I'm being so dead. Who the hell is Ted Stryker? I don't know who this guy is. I'm Googling him right now. Ted Stryker. Airplane? It's a movie? Robert Hayes? Okay. I guess what's the IMDb rating on this movie? Is this a good movie? Is this worth watching? IMDb. If it's not an 8 or above, I'm not watching it. Okay, it's good rating. All right, so we'll watch Ted Stryker. We'll do that. We'll do that over the weekend. All right, so what Dan Ives is talking about, I think all of us can agree with, which is that this is going to be a fork in the road moment for Tesla if they do not figure this thing out. Q1 earnings, dude, on Tuesday. Make sure at 3:45 p.m. you have nothing to do. Okay, 3:45 p.m. You guys know where to be. You got to have a clear schedule, because you need popcorn, you need a soda, you need a beer, whatever you need to be ready, because this is going to be one of the most epic earnings of all time. And I mean, look, I want it to go well so the stock goes up, but also I think we all recognize it probably is not going to go that well. I'm more curious, not just about the numbers. Forget the numbers. The numbers are going to be bad. How does Elon talk on this call? Dan Ives, who's been bullish on Tesla for years, $300 price target, which right now sounds insane. If Elon doesn't say what Dan Ives wants to hear, and for the past couple of earnings calls, Dan's been pretty critical of Elon, calling him a child versus an adult in the room. It would be interesting to see how far does Dan Ives downgrade the stock, right? He's the most bullish on the street. Does Kathy, still buy? She, by the way, we didn't talk about it in the market open. She bought $13 million worth of Tesla last night at $150. I think another 80,000 shares. So, and she bought 60,000 shares the day before at $154. So she's been buying the dip. The question is, how bad can this get on this earnings call if the street doesn't believe in the robotaxi vision? And if the robotaxi vision doesn't get people excited, then it's going to be pretty tough. Elon tells everyone to suck it. I think that's going to be Elon's mentality. I think he doesn't care anymore, but it's going to be interesting to see if the street actually is willing to deal with Elon acting that way. We got the market close in 2 minutes, a bunch of other things to talk about, but wanted to show you guys some green. Most of the favorite stocks we all love are red on the day. 10 stocks that are green. Pepsi, Truist, SL Green, Trump's green, folks. Cisco, Starbucks, Ford, Bank of America, Alibaba, Verizon. The common theme behind all of these companies, if you can kind of tell, is I'm pretty sure all of them outside of Trump pays a dividend. Yep, pretty much all of them pay a dividend. So traditional, or does Baba? I think Baba pays a small dividend, but they're more value companies. The market's looking for a little bit of safety. Alibaba does have a dividend, 1.45%. So we're seeing some obvious rotation from growth to value right now, given these are the stocks that are green here on the day. And on top of that, Marathon, which is the Bitcoin miner, is up 10%. So the Bitcoin stocks as well have done okay today, given the Bitcoin halving, which we'll talk about in a bit. CleanSpark as well is up 6%, is coming up. And so you got Bitcoin miners that are green, and then you got value stocks that are green. Pretty much everything else is taking a bit of a haircut today at the close. And so in about 30 seconds, we're going to see how the market ends up closing. S&P, again, is going to be down 1% of the day. This is the 6th day in a row that the S&P is down. It has been 6 months until we've seen a drawdown. Now, the bears will try to claim victory for their bearishness over the past few weeks. I think it's a little premature. I think we get a 10% correction. Like, yeah, you can gloat a little bit. But right now, I think it's a bit premature given the market's still up phenomenally over the past year and definitely year to date if you look at individual sectors and stocks. So We get some more pain, which probably is going to happen, then yeah. But right now, I think we do have to see if we're going to get a bounce over the next few weeks, if earnings are good, or if this thing keeps heading to the downside. 4 p.m. Friday. We are here at the end of the week, April 19th. Thank you, everybody, for being here. The stock market is now open. The stock market's closed, not open. Sorry. I want the stock market to be open forever, dude. That's it. That's why. I think yesterday on the market close, I said the market was open as well, and I didn't notice it. And everyone commented in the chat. And I was like, oh yeah, I just want the market open forever. S&P 495 on the day, down 494.7 on as soon as we get into after hours. SMCI nasty 23% down on the day. Last time S&P dipped this much, it rebounded pretty aggressively. It went from 684 to 1200. And then normalized at about 1,000. Right now at 23%. Next week's earnings. Could you imagine if SMCI goes to like 400 or 500 because the earnings are just not as good? And this stock was at 1,300, like at the peak in March, and it falls down to 400. I mean, that would be the shorts would like really claim victory there. That would be incredible to see how that plays out. Alibaba 69, Clean Spark up 6% of the day, incredible. ARM got decimated. Wow, I didn't take a look at this. I forgot to take a look at this one. 16% down. Shout out to Matt in the chat. I know he has, if he's here, I know he has puts on ARM. ARM is down 16%. And yeah, it's down 16.9%, primarily off the fact, I'm probably assuming because of SMCI, maybe some insiders are putting shares in the market from SoftBank, which is creating a larger float. But that one probably deserves to be down. And we've been talking about this one being overvalued for a couple months now. SoFi 7-Eleven down about 0.28%. Robinhood got wrecked today, down 2.63%, 16.68. This one just took a bit of a beating. Maybe it's from the perception last night of them closing 24-hour trading and people got annoyed. Probably more so due to the fact that if the market falls down, then Robinhood falls down with it because Robinhood benefits off trading volumes. And if trading volumes are going to subdue for a little bit, then obviously Robinhood's business is going to be affected. So I think there's a variety of reasons Robinhood is down, but it is here down now at down 2.6%. At 16.63. Palantir also took a bit of a beating today, $20.42. I think at one point Palantir got to like $20.10. So it was close to that below $20 range, but there was enough people willing to buy the dip, down 3% here on the day for Palantir. I do have some $23 puts that I sold like a month ago that I just keep rolling every week. And so at this point, we're going to roll ourselves out of this situation. I do think by the end of the year, Palantir will be above $23. So I don't think we're going to be assigned those shares. But we'll see what happens. For now, we are rolling those puts and hopefully just delaying that while Palantir has time to catch up. Celsius also took a nasty beating, down 1.62%. Well, not nasty, not today, but nasty over the past couple of weeks. It was at $99 on February 29th. Now it's at $68. QQQ 414. Down 2% on the day. Let's go to the Bitcoin stocks. So we have the halving coming up, and we'll talk more about that. But Bitcoin stayed strong today, up 4%. Ethereum up 4% as well. As a result, Coinbase, oh, wow. That's why Robinhood's down as well. Coinbase and Robinhood both took a beating today. So the miners went up, Marathon and CleanSpark, but the brokerages, Coinbase and Robinhood, even though Bitcoin is up 4%, went down. So a little bit of a dichotomy right there that we're seeing. Coinbase and Robinhood basically acted like regular stocks today, whereas the miners acted more of a proxy on Bitcoin. Riot's up 10%, Marathon's up 4% or 9%, and then CleanSpark as well up 6% on the day. MicroStrategy down a little bit, down 2.82%, given a trade that's such a big premium to Bitcoin. So if Bitcoin's down, then that one's going to be down as well. Joey says that Bell makes me never want to watch you again because you are annoying like a child. You don't have to watch it, Joey, but there is a little bit of youth-like childness that I think makes the stream a little special. That's why we ring the bell every single day, and we've been doing it for like 2 years now. Shout out to Ray. He just tweeted this at me. He said, I was 5 minutes late. I needed to catch up real quick.
6th day in a row after 7.
Ray, you could have just went to it because you're not listening to it obviously when you're at 2x speed. So shout out to Ray. He's been part of the stream for a long time. I love that. That's hilarious. That was hilarious. But thank you for being here, Ray. That was fun. Michael Davis says, I muted LOL. I was glad for the 30-second warning. Okay, I'll do the warning from now on. Every time right before we ring the bell. I think at this point, some people are so good they know when to mute it because I know a bunch of people do mute it. Because I get it. It's a little annoying on the ears, but like it's to wake your ass up in the morning, dude. And during the day, it's instead of having a Red Bull or coffee, you wake up a little bit. We still have an hour left on the workday. People usually end the day at 5 p.m., right? So if you're in at 9 to 5, you still have an hour left. Still got to get work done. And I still got to get work done right now as well. All right, let's see what else we got going on in the market. Let's also talk about Apple. How much Bitcoin are you holding a bit? Not a lot, dude. It's very little. Remember, I own a proxy plate of Bitcoin, which is Robinhood. I don't really own a lot of Bitcoin. So, I mean, Bitcoin affects me, but it's not like if I own the asset itself, it affects me aggressively. Tesla right here, 147, 146 after hours. Let's look at the proxy plays as well. Microsoft, wow, down below 400. Okay, I did not see that. Apple, we'll talk about Apple in a second. 164. Google, 155. Google's been good because it fell so much a month ago that it's been like, I think, kind of like a flight to safety right now. So Google's been okay. Amazon fell from 189 on Monday to 174. Nvidia, obviously nasty 10% decline, still falling after hours. And then Tesla here at 147. Meta as well, 481. Interestingly enough, Meta was at 530 all-time highs. I like Meta below the 500s before earnings. I like Amazon below 180 before earnings. You know, I like Tesla. Well, Tesla, it's a different situation. We'll see what happens. But I also like Nvidia below 900 before earnings. I think all these companies below these prices during earnings actually sets up market perception to go well, especially if they've already had massive run-ups. I mean, Nvidia is still up, if I'm not wrong. Let's see, year to date. Yeah, 50% year to date, dude. Still up 50% at some point. Right? Like it's still up a lot, even if it's been suffering. And so it's nice to not have them have to have the insane expectations to put up the numbers, even though we know they're going to put up the numbers, but the stock price might not be able to support it. Let's talk a little bit about Apple, because I think Apple's incredibly interesting at this price point. And I want to get some perspectives on what people think here on Apple as well. Put in the chat if you own Apple. Put in the chat if you own Apple as well. Let me know in the chat. So here we go on Apple. I said Apple looks attractive, but I personally would not get really excited until 155, especially if we are on a downtrend over the next few weeks. So a lot of people are, a couple people were asking me today, hey, what do you think about Apple? And that's why I made this post. To me, Apple obviously is exciting because it's at this point, Apple is now year to date. I think it's down 12%, which for Apple is pretty insane, dude. Apple's down 11.86% year to date. The problem is, I think we all know why it's down. Why is it down? High PE. Low growth, literally 2% growth year over year. And then the Vision Pro just didn't turn out to be what we think it's going to be. Maybe Gen 2, Gen 3 will play out, but right now that's not the case. However, the buybacks and the amount of cash they have always make it worth a second look. They buy back $6 billion worth of their shares every month, and they've been doing that for the past couple of years. However, what I also think is really important about Apple is that the market does not need Apple to do well. 2 years ago, if Apple was down 10% year to date, there's no way in hell the S&P would be up 5% year to date, because Apple was such a significant portion of the S&P, and not only from a numerical perspective, but from a psychological perspective as well. That's changed. That's changed dramatically. Apple and Tesla down, Tesla 40%, Apple 10%, S&P's up 5%. So I feel the market can go higher even if Apple doesn't. The M4 announcement last week pumped Apple to 175. That was a fake pump. It was a head fake because that wasn't a real catalyst. Investors were just so giddy to buy the stock that they used that as a reason to get it to go higher. And so obviously now it's selling off as the market's selling off. 155 is more attractive to me when it comes to Apple, but I don't think it has the greatest chance of getting there unless we have a real pullback, because, I mean, Berkshire still owns 47% of Apple, right? It is a staple of so many portfolios. So I think Apple is attractive here, but it's not like go balls to the wall, in the words of Elon, to get a little bit more Apple, given to the fact that Apple, the growth just isn't there. And this is a real thing. I think sometimes when you say the growth isn't there for a company and people think, well, the brand is so special, the quality's there, like people are always going to love Apple products. Yes. But at some point, like if the growth's not there, the growth's not there. The reason why Palantir got hit in 2022 is because, yes, interest rates, macro, all that stuff. But do you guys remember the August 2022 quarter when they fell to like, I think $6 and Carp said they wouldn't be profitable and the growth was horrendous. The adjusted operating margins were 17%. I mean, if the growth's not there, the growth's not there. At some point, people are just not going to put their money in something off the potential that the growth will be there. Like Dan and I have said, if Tesla's M2 is not there, you're not just going to bet on Tesla because of the potential of the robotaxi. Some people will. Retail will definitely do that. Wall Street's not doing that. And so if Apple came out today and they said, hey, there's going to be no iPhone 16, just wait till iPhone 25. It's going to be really good though. Like the stock would collapse overnight, right? No one's going to buy it if there is no growth. In fact, the reason why Netflix is hiding their numbers likely starting next year in 2025 is because they're not going to be growing on those subscriber numbers, and they don't really want to show that to the market. Even Spotify doesn't give further guidance. Their growth is good in terms of users, but their growth is not good in terms of profitability. So I think that if Apple just doesn't put up the numbers, it is not implausible to believe that they do fall significantly from here. The question just becomes, how bad does it have to get for Apple to really take a nasty hit? And if it gets really bad, then I guess we'll see what happens. If not, then maybe this is closer to the bottom. The one catalyst I do think for Apple that is exciting is the WWDC event, which will be in June. Tesla right now 147 as well. And that is going to be exciting. But then it's a question of, is the AI announcement going to be hype or is it going to be real? Like, are they going to come out with an LLM? Are they going to come out with a real model? Is Siri finally going to be useful? Like, what are they going to say? AMD, wow, down 6% on the day. I didn't look at that one either. 146. What about Netflix? Netflix down 10%, 9% on the day, 9.09. Wow. If they don't come out with a really good AI announcement, I think the stock also gets hit as well. So that's the fear I have right now in the context of Apple. Speaking of Apple, on Apple Music, shout out to Matt, Drake dropped the diss track on streaming. Put in the chat if we have any hip hop fans here. I don't know how much of the chat is a hip hop fan. I'm not like a hip hop aficionado or anything like that. That's a good word, right? Aficionado. I got to pull that one out of the hat today. But I do like Drake. He's my favorite artist. And he dropped a diss track on streaming today against Kendrick Lamar. So that's some nice little rap beef that we got going on in the world of hip hop. Vic says that Celsius tanking looking pretty good for a position to start. So on Celsius, what I think is really interesting is their earnings were incredible. And I do think a lot of stocks are being prematurely sold off. Not that investors are wrong for selling them off, but that they're being sold off more dramatically simply because the market is tanking, even though the fundamentals don't warrant a sell. Like, you can't tell me Celsius at 99. You could say it was overvalued. You can't say, oh my God, it's like, Facebook at $300 with what is $1 trillion market cap back in 2021. Like, no, that's not the case, right? Like, a lot of these stocks that are falling, Palantir at 23 is not that crazy compared to Palantir at 20, right? Like, I think both are relatively reasonable valuations. $3 doesn't make the biggest difference. The question here on Celsius is going to be that amended distribution with Pepsi. I still don't know, because I don't study the company that well, if that matters or not. Like, I don't think it matters that much, but if it does matter for their coming earnings, then maybe that could be a little bit of a headwind for Celsius right now. Ahmed, have you seen the Drake video? I think I know which video you're talking about. Yes, I have. I've seen that one. We got a creator producer in the chat. I love it. If we got any creatives, let me know in the chat. If you guys have any music or something, I'd love to just show it to the community, or if anyone wants to promote anything like their art or their YouTube channel, just feel free to put it in the chat, and we can show it to other people. It's always nice discovering new creators. It's always a good stuff to. That's the beauty of YouTube, right? That we actually have the chance to do that because we're all on this platform. Okay, so that was the update in the world of Apple. We talked about Netflix. The Bitcoin halving event. Let's talk about that. So we got the halving event. I don't know if we're going to go live tonight for the halving event. Me and Carlos on Finance Junkies, we might go live and talk about this thing. I hope it pumps, and we'll see what happens. But let's get a small update on Bitcoin halving, and then we'll keep going from there. Actually, before we do that, let's talk about Google. Here's an update on Google, because Google, I didn't get to talk about the story because we've had so many things to cover, but Google officially got rid of. They fired those employees that were protesting in their office about Israel. The CEO did make a little bit of a comment on that. So let's get the update on Google, and then we'll go to Bitcoin.
Alphabet CEO Sundar Pichai announcing this big company reorganization.
Did he just say Sundar Pichai, dude? He did not just say that, dude.
CEO Sundar Pichai announcing this big.
I'm not even sensitive about how people say names. I really don't care. But we all know it's Pichai. Like, this is like the people who say Nvidia. Like, dude, like, I was one of those dweebs saying Nvidia for the longest. It's Nvidia. It's Pichai, not Pichai. It sounds like a Pikachu. Sounds like a Pokemon.
Alphabet CEO Sundar Pichai announcing this big company reorganization in a new memo, consolidating teams to help develop AI products more quickly. But he also hinted at a new type of workplace culture for Google. Deirdre Bosa has the details in today's Tech Check. Hey, Dee.
Hey, Carl, good morning. So let me give you a bit of context. Google has really been the poster child of cuddly tech culture, kombucha on tap, masseuses on staff. That's the softer side of it. But also, for many years, it tolerated an openness for employees to bring social, political causes to work, mix ethics and business. Its founding mantra, even a biggest example of this, don't be evil. But we are increasingly seeing a tougher Google and a tougher Sundar Pichai at the top, necessitated perhaps by this increasingly competitive race in AI. Pichai just sent a note to employees outlining how he is going to streamline the business to simplify structure, improve velocity and execution, but the most interesting part of his memo that came at the end of it. He wrote, and I'm quoting him here, "This is a business, not a place to act in a way that disrupts coworkers or makes them feel unsafe to attempt to use the company as a personal platform or fight over disruptive issues or debate politics." And guys, this was a not so veiled nod to what happened earlier this week. A group of Google employees, they staged a sit-in across a number of Google offices, including one literally inside of Cloud CEO Thomas Kurian's office at headquarters. They were protesting a more than $1 billion Israeli government cloud contract. But instead of hearing them out or dropping the contract like Google did back in 2018 with the Pentagon AI contract in response to employee blowback, Google instead nearly immediately fired nearly 30 of the employees involved.
That's a big deal, dude. I didn't think Google would do that. That's a big deal.
In that sit-in. And Pichai's memo now underscoring this point that this is a business, i.e. don't bring your social causes to work. That is certainly a departure of the Google we've known for the last few decades. To further put this in context, look at Meta's announcements yesterday. It is integrating its AI assistant into its family of apps. It also announced the arrival of Llama 3, the next version of its open source large language model. So the goalposts here, they are shifting very quickly. And Google seems to understand that it needs to get its house in order so that it can keep up or take back the lead, which some feel that it's given up. Now, how it impacts the financials, the stock, the race will be certainly playing out at the top and bottom lines of the mega caps as we have been tracking. And in particular, I will be looking for more of this kind of commentary or hints of a tougher Google.
Really interesting, dude. Did not expect Sundar Pichai to honestly have some balls and do what he did. Brian Armstrong here comments on what Google did. It's a great start, CEO of Coinbase, and it will probably take much more than this to fully correct, like an exit package for some percentage of the company. Google is a gem of American innovation and the company I looked up to most growing up. I doubt they need it, but happy to help them in any small way if we can. Life is so much better on the other side. Get back to pure merit and tech innovation like early Google. Why does this matter that Brian Armstrong is saying this? Brian Armstrong in 2021 during the Black Lives Matter protests in the United States basically told his employees that were bringing that conversation into the Coinbase company to get the hell out. He was like, look, we're not going to deal with this shit. And I the reason Brian feels so deeply about this is because if you were to make cryptocurrencies a real thing, right? Just like whether you're for crypto or not, if you believe in Brian Armstrong's vision, theoretically, you are creating more economic freedom and economic democratization of freedom across the world by getting rid of the sort of financial barriers like the JP Morgans and the traditional financial system that creates those barriers for people to exchange money. That unlocks massive opportunity. It's much easier to live in this society, no matter your color, your sexual orientation, whatever it may be, if you're rich, right? Like just objectively, if you have a higher net worth, you may still face problems and discrimination, but a lot of that can be mitigated based on the zip code of where you live. So for him, economics class matters much more than race or gender. And so he made that memo back in 2021, got a lot of shit by it by Silicon Valley, but he did what he had to do. Google has encouraged their employees to bring their political beliefs into the workplace by stopping the Project Maven contract in 2018 when Google employees got like upset that Google was working with the DoD for autonomous drone targeting. And then Palantir ended up taking that contract. Palantir right now, $20.42. So what's really interesting is Sundar Pichai basically is doing a full 180 and he's like, nope, we're not dealing with this shit anymore. And I think the reason Google's doing this full 180 is because they just can't do this anymore. Like the stock, I mean, I think Pichai, when the stock was at 129 after the Gemini controversy with the white people stuff, I think when he saw that happening, he saw the writing on the wall for, his tenure at Google at some point, right? Like you just can't do that for that long and not expect for something to happen. Just like someone said in the chat, you can't protest the company and not expect to be fired. If Sundar Pichai continued to do what he was doing, which is let this culture disseminate across the company, he would probably have gotten fired. So I think this is a strong memo from his perspective, and it's great for shareholders because at the end of the day, if you're a shareholder, you want the company to focus on shareholder value creation and politics in the workplace. I never even understood it, dude. Like, you know what's so funny? I think in college, I got into a political debate. This was like my freshman year of college in a class. And the class was like, I don't even remember the name of the class, but I got into a debate with this dude during the class because it was like an open discussion class or whatever. And I was so passionate about the debate. And then I just, I kind of realized, like, does it matter, dude? Like, was it really that serious to do that there? in that college class. And I know college is a time for everyone to debate and discuss and intellectually develop and all this. I get it. But like, I think about that in the workplace as well. If you're in the workplace, these people are not your family. These are your acquaintances that you have to work with. And so debating with them, does it really matter? Like if someone likes Trump and you don't like Trump, do you really have to get into a debate at your employer's office where you both are there to get paid? I just don't think it matters that much. And the older I get, and I think a lot of the people that have the beliefs that no, we have to fight for this right, maybe they just haven't matured as much because, like, at the end of the day, it's just not that serious. And I think Google is taking a big step to say, you know what, we're just not letting this happen anymore. And that's what we're seeing in the context of what they did. Only if it's on the internet. Yeah, if it's on the internet, then go ahead, say whatever. If you're anonymous on Twitter, but if it's in person, it's a much more tougher. Now, speaking of Google as well, Meta announced a partnership with Google yesterday. This is something we missed yesterday. I didn't get to talk about it. This was absolutely incredible to see. Meta is putting Meta AI everywhere. What is Meta AI? So you see this symbol next to the messenger symbol at the top right-hand corner. This is basically Meta's open source Llama 3, their LLM model. Which is, in this case, if you click on this, it's basically like GPT, right? It'll open up a little search box. Same thing here in the messenger chat. You can click on that right at the top. Right here, this is on Instagram. You can ask Meta AI anything. So literally on Instagram, it's not rolled out to everybody, but in certain phones, you can be like, show me pictures of like France. And Meta AI will start filtering Instagram to show you pictures of France, which is pretty damn cool. Meta has 4 billion users, and they're integrating all these different ask Meta AI anything search boxes. They have a partnership with Google as well. So if you ask like, hey, give me like 4 restaurants near Canada for a good like steak near like Ontario or something, they'll integrate with Google, and then it'll show like 4 restaurants. So this Google Meta partnership is interesting. I think it's kind of a prelude to what Apple's going to do with Google and Gemini. So Meta has Instagram, WhatsApp, and Facebook. 4 billion people use those 3 apps every day. They've created their open source LLM, which people are saying it's much better than Gemini 1.5. They released the new one a couple days ago. And they've integrated Google's search box into that whole system. And they're both working together to be able to provide access to people when they're looking for answers. Well, Apple, I think, is going to do something like that, except it's going to be more generative. And it's going to be on the device itself, which is the whole idea that this iPhone 16 is going to be a really, really compelling offer. Because if you can generate answers on the device using Gemini at the edge without having to go up to the cloud, that's a very valuable proposition, right? And that might be a little bit of a partnership there. Now, what does this matter for Google? I think this is bullish for Google. That means there's going to be more searches going through Google, even though they're still splitting it with Meta, but at least they're not like completely siloed out of that ecosystem. They get access to 4 billion people that are using the Facebook products. And then in the context of Apple, they're also getting access to Apple's distribution. So now they have Apple's distribution, Facebook's distribution, and some potentially rev share models that might exist. They're overall making Gemini more valuable than something like a ChatGPT, because those are the 2 guys really going at it, and Anthropic as well over the next decade. So I think it's bullish Google. I think it's good for Google. Would I buy Google right now at a PE of 28? Not really. Quite frankly, buying any of the Mag 7 is a little tough right now. I know Tesla is down, so if you're DCing into Tesla, I think that's not the worst idea. And then Nvidia, I kind of feel like Nvidia is a little bit of a falling knife, but then again, it's down 10%, dude. Like, there are so many people that want Nvidia. Like, the market wants Nvidia. We know the market wants Nvidia. So is this knife going to fall all the way down to 600, 500? I don't know. If it does, if it falls down to 500, that means a year's worth of gains, about $1.3 trillion eliminated in the next few weeks upcoming onto the earnings. I just don't think the market lets that happen. But if it does, then it's going to be a little tough for Nvidia shareholders. Now, granted, I think that's going to be the opportunity. If Nvidia goes back to 400, $500, as long as the fundamentals haven't changed, I think all of us should consider really looking at that as like, hey, is this just irrational? Is this stupid? Or is this demand is falling off a cliff for supply chain, for semiconductors, and their supply chain's messed up, and therefore maybe there's a reason that it's at that level. So we'll see. Vince says, I think new Samsung phones are also powered by Gemini. Yep, I agree as well. I saw that partnership yesterday. I think there's a lot of interesting elements to Google, and they're seemingly finding a way to pivot out of this whole conundrum they're in. What is the conundrum? The conundrum is that 10 blue links are not going to be as popular over the coming decade, over the coming years, and definitely over the next coming decades. Like, we're just not going to want those answers, which means Google's going to need to have some type of response there. Let's get one more market update, and then we'll talk about a couple other stories. Then I'll get you guys out of here. What do you think about Palantir at 2050? I like it. I sold some puts on Palantir at 2050. I think that's fine. Based on the premium, your adjusted cost basis would be below 2050. So I think that's fine. I think Q1 earnings are going to go well, and Palantir will be probably close to 23, 24. I could be wrong if the macro takes a shit, but in general, I think 20 and below for Palantir is not that crazy at all. All right, here's a little bit of a macro update on should we be bears or bulls from RBC when it comes to the S&P 500, and then we'll keep going from there.
Market. So look, we could go through March, and many of us did, and you did, and said it's not going to be this easy forever. We had no 2% pullbacks, so we were kind of due for some kind of a setback. But what specifically do you think the market's contending with? Obviously, we got the geopolitical headlines, the higher for longer story, and then, maybe just a question about whether this economy can handle what yields are giving it.
Yeah, I think it's a really strange time in the market right now. We've been overdue for this pullback. Sentiment has been stretched. I mean, I've been worried since January. We're finally getting the pullback now. I think you've got a combination of de-risking to some extent. I think you've also got the begrudging acceptance of a hot economy continuing to build, and that's what I'm really seeing in the rotation today. We're seeing secular growth themes getting sold pretty hard. You don't need secular growth as much when cyclical growth is picking up. And, I think I saw today the consensus GDP forecast is up to 2.4%. That's pretty darn close to average.
For the full year?
For the full year.
Yeah.
And in a hot economy, you typically see value and small cap and cyclicals outperform. It's the cool economy that growth and secular growth themes tend to dominate. We're on the cusp of exiting that.
We do have things like banks up today, energy up today. So part of that cyclical value trade, perhaps. I guess the question is, if earnings are going to hang in there in general, do we need any further setback than we've had already?
So to me, a garden variety pullback is 5 to 10%. That drawdown that we had last fall when interest rates were spiking was about 10% on the nose. So there could be a little bit more to go. We've got to watch the sentiment indicators pretty closely, and they've been pretty frothy. So I think it's going to take a little bit of work to really get them down. I don't think you have to turn to an uber bear here as long as we've got the economic tailwinds at our back. The reality is if you see a pullback more than 10% in kind of the 15 to 20% range, that's typically associated with a growth scare. And I don't think we're talking about that right now. So even if it gets a little bit worse, I wouldn't really expect it to go too far below, say, 4,700 or so. I
agree. I think a 20% decline would be a growth scare. We know that Q1 earnings are good, so there's likely not going to be a massive growth scare. But 4,700 would be, a place where this probably bottoms out if we do get a pretty, normal correction, which at that point would be 10 to 15% down from the current levels. All right, we're going to have a guest join right now. We're going to have Steve. I'm going to call him from his phone. He is currently driving, but he is willing to talk to us. And let's get his perspective. I know a lot of you have been missing him as well. Hello, Mr. Dividend Streams, aka Steven Fiorillo. You are live with me and 836 people on the market close. Thank you for taking the time to join us today.
You get more viewers than CNBC.
Okay, that's not true, dude. CNBC has like hundreds of thousands of people. That's not true. But first of all, the audience missed you. All right, I'm already getting comments right here that they missed you. Steve's the man. Steve's the guy. You do have more responsibilities now. So mental health wise, how are you doing with all the excess responsibilities, and how many Louis Vuitton bags are you buying, given those excess responsibilities are fueling your bank account now?
Doing good in zero.
No Louis Vuitton bags.
No.
Okay, I would suggest you should live a little, Steve, because that's important to do. Anyway,
our definitions may be a little different.
I know you're buying like Pokemon cards out the ass, dude. You're not going to admit it, but you're probably buying some alternative assets. Louis Vuitton is not a bad thing to buy to flip. That's not a horrible idea, right? Anyway. Steve, you're not good on TV, dude. You can't let the awkward pause happen. You're not good for TV. Goodness gracious. Okay. What do you think right now about the markets? We're down 10% on Nvidia and 5% on the S&P. What do you think?
I think if anybody really thought Nvidia was just going to go up in a straight line, they're crazy. I mean, how many times is that these data centers, they are replacing all their chips, but once they're done with their upgrade cycle, they need to depreciate all the assets and make a revenue on the capital outlay that they put out there. I mean, I think NVIDIA is going to do fine for the next year or two, but I think they're going to run into a real demand problem, because it doesn't matter how good their next series chip is, the bottom line is that their customers are not just going to continue to replace the chips.
But demand's not the problem, right, Steve? Like, we know the demand is insane.
It's going to be a problem in the next couple of years.
So why do you think that's affecting it right now, today?
I don't know. I think it's something. I don't really follow Nvidia that much. I just don't do that stuff. It's not something I'm interested in, to be honest with you. And I think they're going to have a lot of competition with Amazon, Microsoft, and Meta and Alphabet making their own chips. I mean, remember, Apple kicked Nvidia to the curb, they kicked AMD to the curb, and they kicked Intel to the curb, and they designed their own chips. They're M-series chips. There is no reason these other companies can't do the same.
Okay, let's talk about Apple. You are a big bull on Apple. You are the Huckleberry Finn when it comes to Apple. And I don't know if I used that correctly, but we'll go with it. Give me the bull case for Apple at 165. It's down 12% year to date. Why should I get excited for it if I don't have a position in Apple?
I think the real question is, do we think Apple is going to become less important than it is today? I think that answer is no. And I think that there's a very big use case for VR, AR, and it may not play out this year. Maybe it doesn't even play out next year, but I think long term, it'll play out. Apple will keep buying back shares. They'll keep growing their EPS, even if it's manufactured. And I think that they're going to continue to grow their services business. And when you really get that headset down to a $799 price point, I think you're going to see a lot of people buying it. And I think that you're going to be surprised at what they're going to be able to do with services. And I think that sports and concerts is something that not a lot of people are talking about, that a lot of people are going to realize the use case for it. And there's going to be a tremendous amount of money being piled into virtual tickets.
So your bull case is still indeed the Vision Pro. That's what you're...
Yeah, I mean, it just makes sense. Look, I have the first Oculus that Meta came out with. And while there was not a lot of content and stuff for it, what was available 6-7 years ago was amazing. What it looks like is available today is certainly a huge platform to grow on. And when you think about just educational purposes, I mean, really think about the use cases for learning about arteries, the heart, organs, that type of stuff, or even from an engineering aspect, learning about an engine or doing things. I think there's a lot of applications and it has the potential to really, from a, say, entertainment standpoint, but a learning aspect also. I think it could be the next evolution of an encyclopedia.
Okay, what earnings are you excited for the most? If you had to name like 3 companies, big tech or not, that you're looking forward to over the next month and a half?
Put big tech aside. Do you see what SL Green did with earnings?
Today?
They shattered earnings.
Like good shattered or bad shattered?
Shattered.
I'm going to go to their stock. Oh, yeah, they're good. They're green today. I forgot. They're up 2%. Yeah. Okay. So SLG was good. What else? What else are you looking for? Are you looking forward to Amazon? I know you have a position in that one.
Yeah, I'm always looking forward to Amazon. But Meta, I think that this is going to be a big year for Meta. I think Meta could go to, I don't want to say nothing, but I think Meta goes higher because we haven't even seen the presidential cycle start and the amount of capital that is going to be spent on advertising. And there's something like 46 elections globally this year.
Yep.
I think that they're going to have a huge spend coming forward. I think Alphabet's going to do well. And Meta is a monetizing machine. They really are.
Well, so in the context of so you think Meta's going to do really good this year because the election spend stuff. Do you feel the same on Google, that the advertising hasn't started yet for political ads later?
Yeah, I think you're going to see a big boost in second half of the year because you're going to have so much on the cycle with everything. But I think Alphabet's going to continue to do well. I still think that they're the most undervalued in the sector if you're talking about big tech.
Do you think Sundar Pichai's firing of the 28 employees that protested for the Israel contract was the smart move for the direction of the company?
No comment.
Okay, so you think it was the right move? Dude, you're a shareholder. You can say if it was good that they fired them or not. You're allowed to say that. It's okay.
What do you think about Tesla?
It's so funny that I know we're going to call after this, and I know exactly what you're going to say about that decision. I know the exact words you will use about that decision. Okay. Anyway, Tesla. All right. So I think Musk is basically deciding that he's going to pivot the company from M2 to robotaxi. A, do you think that's happening? B, do you think that's a smart thing to do?
I think it's great for me because the stock's going to plummet. I'm going to buy more.
Wow. So you're saying the robotaxi pivot's going to fuck the stock?
Correct.
Why do you think that's going to happen?
Because you need regulation. He can have. How many times do I have to say it?
No, you've been saying it for a while now, too. I got to give you credit. You've been talking about this regulatory thing.
You can put FSD perfectly out there. It can work perfectly. That doesn't mean you can use it.
Okay.
Until you get legislation that you can actually fall asleep and drive and not go to jail or get a ticket, it's not real.
Okay. What about the M2? Do you think they're definitely pivoting, or do you think they're going to make the $25,000 car, but not as much as focus as they had before on it?
I think that they're crazy if they pivot. Look, the $25,000 car puts them in the price range where they need to be to really compete on a massive scale, because Tesla has always been a novelty item, even though they sell a lot of cars. But look, not many people can actually afford a new Tesla. You start competing with Honda and Toyota, you now have a mass market product. And even if your profit margin is only 5% on it, it doesn't matter because it's a volume game at that point.
Steve, let me
taking chips off the table.
Let me ask you a question. This is an interesting question about you as a human being here. This is all public information. Your Seeking Alpha articles historically have been rather bearish on Tesla. And instead of sticking with the bear trend, you started getting bullish around 220 because of the bot. Do you have regret that if you continued to be a bear, you would look smarter because you were bearish the whole time versus being a bull?
No, because when I said it should go down by 85%, it went down by like 76% or something like that.
Yeah, but then you started buying when it went down 76%.
Yeah, and I said that I can't call bottoms. Like,
that's true.
I'm going to keep buying because I think that the bot case is going to be bigger than the automobile case.
Okay, so talk to me about the bot. Everyone's talking about robotaxis. Do you think the bot is being forgotten about, or they're still working on it?
They don't. So here's why it's not being talked about: is you actually have a car that if FSD comes out, you can theoretically monetize it. Whether you're allowed to use it, different case. You can actually start monetizing it, and it pushes the conversation for legislation on the political spectrum. So I think that's why everybody's getting excited about it. I think that they really need to have a working product with the robot to sell the story and then start monetizing it. Once robot sales start, I don't think that you're coming back from that. It's going to be a whirlwind like we haven't seen.
Okay, but on the earnings call, do you think there's anything he can say to get the street to buy the stock? Or do you think the number's going to be bad, he's going to be annoying, Elon's always like a dick on the earnings call, and then we're just going to have a great entry point on Tesla if it falls?
He needs to be an adult, and so what I would love to say, obviously I want to buy more at a lower price because this is something I'm thinking 10 years out. But if you're talking about what he needs to say and what he needs to do to execute to have this go back to where people are excited again, I mean, he has to come out and say, listen, we're not abandoning the Model 2. The Model 2 is going to be out this year. We're going to start deliveries. And this is going to be what we build our robotaxi fleet on. And FSD is going to be 100% over the summer. And we're going to push the narrative for Congress. You say something like that, I mean, this goes back to 200 pretty quick.
I agree. I think that's it. I wonder if he would get that excited about it, but it's a good plan to get people interested. Do you think he deserves this new $47 billion compensation package?
I mean, I don't think you can really say he didn't earn it. I mean, it's not about where the stock is today or now. It's about this was a package from a time period where he made a lot of people a lot of money, and everybody who saw this plan,
if they didn't sell, they're not up as much as they were.
But regardless, that's not his fault that they didn't sell or they did sell. You know, that's not his fault. He did what he said he was going to do, and everybody thought it was possible. Guy should be paid for his work.
But I want to stress on that for a second. I think this is an interesting conversation. So Elon, and I'm going to vote for him to get this as well. But Elon, when the company was 50 billion, he made it worth $1 trillion, right? Does it matter the time the company spent being at elevated levels? Like, for example, hypothetically, it goes from 50 billion 3 years later to $1 trillion, but it stays at $1 trillion for like a day. And then from that trillion, it goes all the way back down to 100 billion. Let's just imagine that happened. So he did what he said he was going to do. He fulfilled the requirements, but then it tanks soon after. Do you think at some point you would say objectively, like, you don't deserve that if it didn't stay at those elevated levels for a long time? So my question here is, if Tesla gets to 100, maybe below 100, which could happen by the June vote, do you still think he deserves it if the stock didn't do what the requirement said that he would be able to get it to do?
So I actually haven't read the package. Do you know what the actual agreement was for the time frame? Because all matters what the package said.
Right.
Like, they had an agreement. If he met the terms of the agreement, he deserves the shares.
Right.
If he didn't, then he doesn't.
Right. No, I mean,
everything else is opinion.
Yeah, and the contract did say it had to be elevated to a certain amount for a certain amount of time.
Yeah, it was probably a 90-day period that I had to hold the 500 billion market cap or whatever the deal was. I don't know the exact terms, but it seems like he fulfilled the terms. And if he fulfilled the terms, then he deserves the equity that he was promised.
Yeah,
I mean,
I agree.
I don't see how anybody can say otherwise, especially when this is something that was passed.
Yeah, and I think the Delaware judge was acting like a communist. I mean, like, it was a horrible, horrible decision. But at the end of the day, you know, now they'll be in Texas as well. You'll have to vote on that to get them into Texas. What did you feel about Drew Baglino and Rohan? I know you don't follow these guys, neither do I, but obviously they're big people. What do you think about them leaving and the layoffs of 10%?
I don't even know who these people are.
They're the two senior executives that left on last Friday. You didn't hear?
I mean, I don't know.
Dude, I didn't know who they were either. I was confused. I was like, who the fuck is these guys? Is it kind of weird?
I mean, I don't know. Are people really worried about that? It's two people. I mean,
they were pretty important people.
Where are the two places that the top engineers want to work? SpaceX and Tesla. I don't know that I'd really be concerned about that.
Okay. Elon just tweeted just now. He said, based on the attacks on free speech in America, I'm starting a national petition for signatures in campaign of support of the First Amendment.
He needs to stop.
Will you sign this petition, Steve?
Dude, I don't sign anything. But he needs to stop. This is another problem. And he has every right to say what he's saying. He has every right to do what he does as a private citizen. But it becomes a different story when what you do as a private citizen leads into the stock, because you are creating a narrative. And even though his beliefs are not necessarily Tesla's beliefs, because Tesla's a company and he is an individual, Tesla is often viewed as Musk, and Musk is often then viewed as Tesla. So he needs to cool it, because he could be alienating people from buying the product, and that's not good for shareholders.
So you think some of the tweets are hurting the stock, basically?
I think if you create a narrative, I mean, look, Jordan had it the best. You think about Jordan's line when he was asked to speak at political things, and he said no, because he's like, everybody buys sneakers.
He said Republicans buy sneakers too.
So I don't know why you would want to alienate half of the country or half of the people that read the stuff online. I mean, it's just, from a business standpoint, I don't like that.
Okay, let's talk about one more thing before I get you out of here, and then we'll end off the stream. Thank you, everybody, for being here today on a Friday. Steve, we have 780 people here. I'm going to put Steve's article in the chat. He just put out a new article on Seeking Alpha. Everyone needs to click on it so that Steve gets paid by the ad revenue. Don't tell Seeking Alpha we told you to do that. No, but seriously, you guys should read it. It's a really good read. Steve and I were talking about this a couple days ago. So a company that Buffett has increased his position in by 350%. It's called SiriusXM. We're not going to discuss like should people buy it or not or anything, but I think it's very interesting. Just look at the idea that Buffett increased his stake so heavily in this company. Why do you think, Steve, based on your article that you wrote, that Warren Buffett is looking at Sirius as a company that's an attractive potential opportunity?
I don't know. It's something he's owned for a while too. And I think that they could be an acquisition target after the merger occurs because it'll be a lot cleaner. But once again, it's content. Content's becoming king, and it looks like an undervalued asset based on its profitability levels. And there was something, I was reading something about it after I put the article out. And what was interesting is, and I need to look more into this, the amount of bandwidth that they have that's not being used with their satellites, which is very interesting.
Yeah, the satellites they have, you brought it to my attention that there's companies out there that potentially might want those satellites, given, maybe Sirius doesn't use them as much as they used to do them in the past.
Yeah, it's infrastructure that's ready to go. It's plug and play.
Right.
But you just look at Spotify, that little table that I made with Spotify versus Sirius. Doesn't make sense how Spotify has that big of a market cap, to be honest with you.
Yeah, I mean, well, Spotify is a tech company that's growing, so that's the core difference, right?
I mean, is it really a tech company?
I would say Spotify is a
media company with an app.
That's disrespectful. That's
It's not.
I mean,
is Audible a tech company?
No, they use AI for the algorithms. The algorithmically recommended music is definitely tech, right?
Okay.
And the profits suck. I agree with you there. Look, I'm not bullish on Spotify, but
I mean, look, 11 million of EBITDA.
No, but the music labels all own the rights.
No,
so
I get it, but at some point, and it goes back to what we've talked about in the past, that at some point you got to look at things from a business aspect. And a company that's generating 11 million in EBITDA, a $50 billion market cap, doesn't necessarily make sense.
Right.
I mean, you could look at free cash flow, and their free cash flow is a lot different. It's around like 700 million or so, but it's still a really richly valued company. When you look at the actual net income, they've never turned a profit. It's very hard for me to wrap my brain around that, and how, look, I get their top line continues to grow, but so does their cost of revenue. So does their total operating expenses. And you start looking at where some of these companies could look to expand. I think Sirius makes sense because of the sports. Because Netflix obviously is starting to get into the sport game with the Jake Paul and Tyson fight. Amazon is all over the place with NVDA and MLB. You see the football rights are starting to go online with YouTube and stuff, and Amazon. So I think this makes sense a lot, probably more sense for Amazon, because they do have a straight streaming platform with Amazon Music and Audible. And I think that they could make a super app with all three and embed all Sirius content into it.
Yeah, 100% agreed. It's interesting. It's interesting to look at. Last question for you, Steve. Are there any other stocks you're looking at, or sectors, given the downturn we're seeing right now, that have your eye?
Nothing that would excite you.
What is it? Energy stocks? I know you're big into that sector.
Energy's I mean, look, Energy Transfer, I wish you had gone on that because it's over 15.
ET, you like that one? Energy Transfer?
Yeah, it still has an 8% dividend. I think it has a real chance of going to 19 or 20. It'll probably top out around 2021, and then it'll trade with the rest of the sector. But
okay.
I don't know. There's look, I like realty income a lot, and especially at these levels. But that's if you think rates are going to start coming down this year, which I do think they're going to make a move in July. But
wait. Well, okay, that's interesting, because the Fed presidents have kept saying this whole week that, I mean, look, Kashkari said it's happening in 2025. You still think we get a cut in July that early?
The Fed can't afford not to cut. It has nothing to do about it. You can stop inflation. Like, this is a much bigger conversation, but you can stop inflation if you want to. It's called, I'm going to choose my words very carefully with this. You have a business environment that is more business friendly, and you increase supply. When you increase supply, you take care of demand. Okay. But I really think that at this point, the Fed can that we are paying on the national debt. A decent amount of that is going to get turned over at a higher rate next year.
But can the Fed actually care about the interest on the debt? Like, don't they have to worry about inflation, not just the debt problem?
They have a dual mandate.
That mandate has nothing to do with
mandate
debt.
is
That mandate has nothing to do with
inflation and jobs. You have jobs and you have this amount of debt and you have this interest on the debt. Government can't use some of that money to dump into creating more jobs and creating efficiencies. And
Yeah, but the unemployment market labor market's fine. So I don't think that they can use that as a reason.
Is it?
It's
though?
the headline that they look at, even if it's not, is 3.9. I mean, at the end of the day, they look at horrible numbers, but that's the number they look at. So I agree with you. I think we get a cut. I don't know if July that happens, dude. I don't think that's happening at all in July.
I don't think they can afford not to.
I agree, but I think it's September. I think it would be way too political if they jump that early.
Also, when it comes to jobs, it's not just about the government. When you think about the cost of debt and businesses, you had rates at 2-3%. So that means people were borrowing at 5%. Now that debt is terming, or even debt that was taken out before that is terming next year. So now they're going to have to refi at 8-9% because of where rates are. You're going to have businesses close and mass layoffs if that occurs, and that's part of the Fed's mandate. They can't afford to keep rates here because they'll have an inverse effect in the business world. You have too many models that are based on a lower rate environment.
SoFi earnings. How do you feel about these guys?
Man, I'm going to wait for them to give a triple beat. They're going to beat top and bottom. They're going to increase guidance. Stock's going to go up. And then 2 days later, it's going to come down.
Okay. So all right. So
I mean, does it do anything else? I mean, if it stays up, great. I'll love it if it stays up. I mean, look, I think it's great and it's going to do well. It's just getting a little annoying. It's like, what else do these guys need to do for people to believe the company?
I do think Noto has to drop the hammer. I think Noto has to do what he does this earnings, the thing Karp did last quarter, which is make people feel stupid for not owning Palantir.
Oh, I agree. 100%.
If Noto doesn't do that, we're going up to 10 and we're going right back down. And there's no way, especially with this macro, we're going to keep.
Yeah, I agree with you.
Okay, last question. Palantir fell down to 20. When are you buying some more Palantir?
Yeah, well, that's why I called you.
Oh, really? Okay. What's up? I know a little bit about Palantir. So
should we buy more?
I like 20 and below. So yeah, I mean, I really have zero hesitation buying. I was buying at 22, dude. I was buying a little too early, but I think 20 is. I've been selling puts right here at this level.
Earnings are on the 6th, right?
Yep. And I think they're going to crush earnings, but I could see the stock falling a bit just because if Nvidia is down 15% or something, that could be a hit.
Yeah, I mean, I want to add to my position again, so maybe I'll add now, and if it falls off after earnings, I'll add more.
Or just sell some puts on it, right? Nope.
I almost closed out my calls, and I almost did a reverse roll the other day because of how much the calls I sold came down. So that's something we need to talk about later.
Okay. All right, Steve. Thank you for joining. Appreciate it, man. Maybe every Friday, if you're free when you're driving, we get you on so the audience can hear from you a little bit, at least every week. So this is awesome. Thank you, man.
All right. I'll talk to you later.
Talk later. Bye.
Bye.
All right, guys. That's it for me. Hopefully you guys enjoyed the market close. We got to hear from Steve again. We'll be live Palantir Weekly tonight, so we'll talk more about Palantir at 11 p.m. And then, yeah, that's pretty much it. Hope everyone has a good weekend. Tough week for stocks. Hopefully we can just not focus on the markets during the weekend. I'll still probably be tweeting about the markets because I like doing that. But hopefully you get some time to relax and just chill and not look at the portfolio too much because, maybe we're in for a little bit of volatility over the next few weeks, but it's expected. We had a great last 365 days. We need a bit of a pullback. We're getting a pullback. And I think we'll be fine going into earnings season over the next few months. Halving as well. That's tonight. Me and Carlos probably are not going to go live for the halving event, but we will definitely talk about it on Monday, and we'll see what happens here on Bitcoin. So thank you, everybody. Have a good one. We'll see you guys for Palantir Weekly, and we'll be back on Monday morning for the market open. Thank you, everybody. Have a good one. Good night. Bye, everyone.